Amit, hi.
Hi.
Hi, everyone. So this is the James Bond of investing. He doesn't have martini shaken and stirred, but he does everything with style, right? So where is the market going? Where are the opportunities? Which index is going down? Which index is going down? What is the economy going to look like? What's replacing what? He's the one that we end up going to. Guys, for your purpose, Amit very frequently writes in a lot of newspapers. In 2021, I think he made a very accurate prediction that we'll see a World War III in 2022, right? Not in 2020, not in 2023, not in 29, because people say, China will invade Taiwan in 2027. We can say anything we want. He said 2022. Now, Amit, I want to start with, I'm just very curious to know what geopolitical events and market environment led you to accurately forecast this global trend with such a specific timeline.
All right. Thank you so much, Shraddha, and very thank you for your kind introduction. I'll try to answer your question that how we made that prediction. So that prediction was made in July 2020. Okay. We made it 2 years back almost before the possible World War III started in Russia and Ukraine, which most of the people believe can be a precursor to the World War III. So there were 3 reasons for these predictions. One, because I read geopolitical very, very closely, right? So number one was a global financial crisis, because I think if the world says today that China got the COVID for the world, then we can also say that it's only United States of America which got the financial crisis for the world. They manufactured that, right? So it started from there. And from there, I think the world started to de-globalize from a one superpower called US. So that was the beginning. In 2014, both Russia and China, they have created an alternative to SWIFT, which is a payment mechanism or payment gateway for the US through which they control all the sanctions in the world. And I think Russia and China smartly created an alternative for the SWIFT payment mechanism. That was point number 2. And point number 3, when we say that COVID is a man-made virus, then I was very sure that something big is going to happen if it is a man-made virus, and the ulterior motive of creating this virus will be unfold in some point of time in next 2 to 3 years. And that's what I said. The world is getting deglobalized right from 2008 crisis to 2016 when they created a alternative to SWIFT and to COVID. Connecting all the dots in the line, I could predict that. That's how I predicted in that media article in Financial Express in July 2020.
Awesome. Okay, so you believe deglobalization, dollar dominance. I'm just summing up the way that the unipolarity is. All of that is being challenged. Awesome. We have Saif also online. Saif, you're in some other name. How am I supposed to find you?
I'm extremely sorry. I've just raised my hand. Yeah.
Guys, this is Saif. He is the head of private banking and a senior director for Yes Bank. If Amit is the James Bond of investing, Saif Khan is a more understated sort of style in doing things. I think if he would not have been a banker, he would have been a historian or somebody who writes like these deep monologues about things of the past. So Saif, you heard Amit, right? In terms of deglobalization, in terms of challenge to the dollar, in terms of the unipolar world order, in terms of the man-made virus. What are your views on this?
So I echo Amit's stance on almost everything that he stated, except that I believe the results will be slightly different. And he was, as in to be able to predict a situation like a war exactly a year before it happened, it takes more than just an expert. So as in kudos to Amit for being able to put that on record. As far as deglobalization or de-dollarization is concerned, I think it's a concerted effort on part of especially China, along with the BRIC nations and Russia to start the petro-yuan trade. And they're trying to figure if they'll be able to challenge the dollar's hegemony. Okay. With respect to, so I didn't know I was supposed to continue beyond.
No, up to you. We can go on to the next question. We have a host of questions for both of you.
Sure. So honestly, I think and it's far too simple when people think that they'll be able to challenge the domination of US dollar by just converting trade in different currencies. It doesn't work that way. For example, Amit and I are in India, and for the rupee to be the global currency of the world, it basically means that I will need to export rupees to the rest of the world, which otherwise means that I will need to import everything that the rest of the world manufactures and provides a service for to India, right? So towards that extent, US will perpetually be a trade deficit country. It will probably import as much as rest of the world put together. So dollar will always dominate. I don't think that the Chinese yuan, or for that matter, any other export surplus or a trade surplus country or a currency will be able to replace the dominance of the dollar. Yes, they will be able to temporarily challenge it on account of small trade agreements around oil, energy, and some other gold-backed arrangements and so on and so forth. But that said, I also believe that I agree with you when you've written The Revenge of the Fossil Fuel. Fossil fuel is not here to go away immediately. It will make a comeback before it ultimately fades. One day it will fade. I heard Nicholas state about the European Union's, I would say, not very well thought of resolution of phasing out all thermal engineered cars and moving on to 100% EV by, I think, 2030 or 2035, he stated, 2035. So it's stupid on part of EU to do something like this when they are unable to control the supply chain. But before that, even if energy starts to get built in currencies other than the US dollar, that is going to fade away. And who makes all the EVs? A few American companies and a lot of Chinese companies.
So I think it's very interesting, Saif, you say that, because today only I was reading that India's attempts to purchase Russian oil in rupees is hitting a roadblock, because what is Russia going to do with so much Indian rupees? They cannot use it anywhere, in the sense that they'll have to eventually convert it to the dollar to be able to use it in the world. It's a very interesting article, but I'll go on to the next question to both of you. We've looked at the past events, right? Now I want your predictions, both of you, for the stock market and the world economies in 2023 and for the longer term. Amit, can we start with you?
Yeah, so I think in 2023, we believe the global markets has already bottomed out, because we already are in a phase of, bear run for last 1.5 years. Okay. And that correction, that time correction and price correction looks over. The only caveat for this prediction is the geopolitical risk. I'm keeping geopolitical risk as constant factor, because interest rate risk we all can manage as fund managers. Yeah. But I think geopolitical risk is something new for every one of us. How to challenge, because we don't know. We take position today in the market for a long term, and tomorrow what Mr. Putin is going to do overnight, we don't know.
You should hire us for that.
Yeah, so that's a biggest risk for us. So keeping that constant, I think the most of the bear market pain is out for the global markets.
Okay, and Saif, your views on 2023? Recession, no recession, inflation, Fed pivot?
So I think you would have read, I've been writing since last year, bullish on India perpetually, and bullish now on the rest of the world also. I agree with Amit that the worst for the equity markets is over. Equity markets will perhaps peak somewhere around the US elections next year for the time being. And after that, you will see a wave 5 as an Elliott cycle of A, B, and C going down. But till the November elections of 24, I see US markets going up. Today, I think NASDAQ will be somewhere around 12,000. I can safely, as in stick my neck out and state that we'll definitely see the previous highs touched again, which was somewhere around 16,000 something. That said, Europe has actually already seen the best. So UK, for example, has already touched its pre-COVID peaks. DAX is almost around its pre-COVID peaks, and this is in a scenario and situation where inflation is still out of control as far as the Eurozone is concerned. America is coming up with all kinds of strange data where on one hand, the Fed is trying to control inflation by increasing interest rates, but the employment data set and the month-on-month inflation, everything is going all over the place. But that said, whichever way, recession or no recession, India is rising till the Indian elections at least, and the world markets on equities will rise till at least the US elections next year.
Awesome. So from the markets to the economies, I want both of your predictions or your take on the longer term sort of emerging horizon in the world. Where do you think the growth is going to happen? Where do you think people should be looking for opportunities? What are the kind of trends supporting or sort of debilitating growth in some certain places or the others? Amit, can we start with you?
So I believe the global economies are already in a very sweet spot nowadays, because I think whatever we had to factor in economically and in terms of financial market, we have already factored in with the higher rate of interest by US Fed. However, I said one caveat is geopolitical risk going forward. For geopolitical risk from going forward from economic and financial market point of view. And there's a second caveat as well, because what we have seen, the US Fed interest rate curve, the interest rate from US Fed has risen from 0.25 to 4.75 in last 1 year.
Yeah.
Last time we have seen this happening from 2003 to 2007, and 2008 we had a financial crisis. Last time US has increased this much of rate of interest in 4 years, and still we had a financial crisis, right? Because of subprime loan crisis. Today, we have the US has raised so much of rate of interest, such a high propensity of rate of interest in 1 year. So we need to figure out how this world is going to shape up after this increment in the rate of interest. In fact, I recently tweeted, Sunana, if you can share that tweet for the larger audience, that what we believe in, that can be the biggest risk for us going forward.
Awesome. Sunana, are you sharing the screen?
Yeah, that's a tweet. I think we done it last week.
Okay.
If you see, yeah. So I think this is on the right-hand side, we can see the US Fed rate of interest. You can see the cycle from 2003 to 2007, and then we had a crash in 2008. This time it is again, within a year, it has moved from 0.25 to 4.75%. That's risky. That's for US Fed rate of interest graph. On the left-hand side, we have US housing sales number, which are coming to 2009 low in terms of number of sales. So there's a less churning in the housing market now. So once that stabilizes, the people may not get an exit at the price at which they are looking forward to. And once we have a job loss and a possible recession, which the world was talking about 2 months back, right, is going to be a challenging for the US banks again. So that can be a bigger risk for us. But if we can pass through this, then I'm sure we are heading for a very long ride. And we are perpetual bull on India. Any which ways, I think India is going to do well. If we have recession in US, they will outsource more to us. If they don't have a recession, we'll have more orders, right, from our IT company. Right?
Basically,
So
I think the only thing that both of you agree on is India.
Absolutely,
everything
yes.
else, dollar, US, Europe, nothing you guys agree on.
So India is the most undervalued stock in the world. I can always say. In fact, in our last write-up we given to the media, to Economics Times, we said India is the most undervalued stock in the world today. A economy which is almost in the top 5 ranking in the world on 5-6 parameters, right from your global, right from your GDP to your forex reserve to your gold reserve. We are number 9, right? Still we are being rated BBB minus. Why? Right? So we believe that it is the most undervalued stock in the world. And I think Saif Bhai also said it, and I think we have a perpetual bull on India. And I said, whether it's a recession or no recession in US, India is going to grow with leaps and bounds.
So guys, let's do some probability analysis now, right? So we did a poll, and let me just open up the poll results. When do we think China will invade Taiwan, right? So majority of the people have said beyond 2027. So in the scenario that China ends up invading Taiwan, which then becomes a larger war, how do you then see all of these trends panning out? because it's going to be an Asian century. I always say these predictions are being made with a complete disregard for how we are developing geopolitically, right?
So,
Yeah.
if I'm allowed to come in here, I
Yes,
would
please.
just, I'd just like to state something which is slightly different with respect to what the markets today are reading. See,
Sure.
the reason why United States today is, you could say, the top country of the world is not just because of the consumerism, it's also because of the diversity. It's primarily because of the diversity. So the same European that Nicholas spoke of, the French and the Germans and the Britishers and everyone else who can't sit together and work out a common defense strategy or a common energy strategy, they're the same people who are actually living in United States. Right, so U.S. German ethnicity is the highest, followed by Irish, and then African Americans, and then Mexicans, Italians, Chinese, French, and everybody. So the strength that U.S. derives is on account of the plurality that exists in that country, and also because of the democratic setup with respect to the access to the resources. India is the only country which comes close to that kind of plurality. And importantly, what goes for India is the median age, right? So we are practically a sixth of the world population, and we are at 28 years of median age, which is a decade less than United States of America. And we are not a stagnating population, or we are not a reducing population. So China, whatever it does, I don't think it's China is okay. It's a great place. It has its place with respect to the manufacturing impetus that it gave to the rest of the world. But I think China as a story is temporarily there with respect to the stock markets. And reopening of China will perhaps help Warren Buffett and Charlie Munger, because they've been vehement about China as an investment destination.
We have to hurry up a little bit, please.
Yeah, sorry, but going forward, whatever it does, I don't really think it's going to impact. India is the next destination where everybody is going to flock to on account of multiplurality of the nation, as well as the fact that we are only 28 years of median age, and there isn't any country which is around which will be able to compete at that kind of a level.
Great. So I will just add two things to that before I go to Amit. I want to ask him things about the articles he's written for us. So the US is not only that, the US also has a geostrategic position which allows it to control two largest trade channels in the world. There's no country in the world that can control the Atlantic and the Pacific together. Right? Nothing moves in these areas without the might of the US military. Any country which becomes an economic power in the world has to be underpinned by imperial ambition. That's been there forever, right? So any country we look at will have to eventually, China is now developing that imperial ambition, but they get thwarted because they've not had a navy for years. Again, so that's just to add on. Amit, you wrote for us the ticking time bomb of the financial system, where that every economy in the world has basically worked on sort of devaluing their currency. Right. And that was okay till the dollar was dominant. But now that challenges are coming to it in any form. It may be that US still stays there, but the dollar is challenged by CBDC, et cetera, et cetera, et cetera. So can you talk a little bit about that and how did you come to that? And you just have 2 minutes for that because we need to go into questions now.
All right. So rather than speaking, I'll show you some graphs which are self-explanatory.
Sure.
Right? Because data speaks more than the emotion and what I feel. Right. So then if I request if you can share the graph for US dollar. So I have taken the data for purchasing power of US dollar from 1920s to 2020. That's how the dollar got devalued in terms of its purchasing power because of their constant inflation, right? If I can take it from 1970s, when Mr. Nixon has removed gold standard from the world, which were earlier backed up for the for the US dollar and the global currencies, he removed that standard. He said, I want to remove gold as a standard backup, and it's dollar which is going to back up all the currency in the world from 1971, right?
Sure.
Even since then, the US dollar has lost 90% of its purchasing power. So we are already seeing the devaluation of US dollar from last 100 years, and we are going to see it for next 30 years as well, because this currency in itself, the model which we have built up, because the currency which is a superpower for the world is from that economy which is running into fiscal deficit from last 50 years. So I'm surprised. If I go back to my school and my college, I always studied that a superpower has to be a surplus country, right? Because that's what we believe in. Unless you are into profit, you cannot run a business. And these guys are running the economy, forget about the business, right? Because they have a military power. So what I said, I heard, Saif Bhai, I heard you as well. You talk about the military power. Saif Bhai talking about the culture there, right? The US is only one thing, and that is free printing press in the form of US Fed. They can print money whenever they feel like. And once that press is stopped, your military power is gone, because you cannot spend $800 billion on your defense.
Correct.
Right? So everything is secondary to it. And I think this is what going to happen, because when Russia and China are going to, in a planned way, they are going to challenge US. Iran is on their side. They're going to challenge the supremacy of the US dollar going forward. And the direction is very, very clear. That this graph, which we have seen for last 100 years, it will continue in the downward direction even for next 30 years. So that's
this is fantastic. I think I need to have an entire session of 2 hours just on this. But
I can speak on this for 2 hours, because
I have no doubt you can speak on it for 2 days without stopping. But so we have to, any closing comments in 30 seconds, guys, because we need to move on to questions.
So one last thing, while I agree with everything that Amit stated with respect to dollar going down in its purchasing power, I still believe that the US has one ace up its sleeve, which people feel by means of CBDC is actually decentralization. I don't think it is decentralization. I believe Bitcoin is, today all Bitcoins are backed by stable coins. Every stable coin is priced in USD. And CZ today came out stating that perhaps Binance will move away from a USD stable coin, which basically says that even they realize that Bitcoin is nothing but US dollar extension. So even if world adopts digital currency, it will be extremely difficult to get rid of the dollar dominance, irrespective of where gold stays and where gold goes.
Awesome. Amit, any closing remarks?
So adding to what Saif Bhai just said, I think dollar had been in a downward trend. I think we both agreed on it. Now, what we feel world in next 30 years, we believe world will be divided into 3 parts. Number 1, US and Europe. Number 2 is more Asian nations and Russia. Number 3, rest of the world. That's how the world trade is going to happen in the next 30 years. And I will not be surprised the way we track US dollar index today. In next 30 years, you will be tracking a new index called BRICS index. BRICS as a acronym, because I think this BRICS nation control almost 40% of the population with 25% of the global GDP. And I think as the dollar goes down, right, because of a lot of stuff which we talked about, you will find more local currencies, the more trade will happen in the more local currencies or unified regional currencies. So BRICS may have its own currency, where probably we'll be talking about in the next 30 years. So it's going to be more regionalized play in terms of trade rather than the complete globalization which we have seen for last 30 years.